market's got to stop. It can't keep going up forever.
Yeah, that's what we're going to talk about today.
And I think that Bitcoin, if it does tank, that Bitcoin is an investment that a lot of people would move to, which would, I think, would, you know, cause the value to appreciate.
Yeah. Yeah, that's something I want to talk about today. Today's topic, so I did see that there's been quite a few new people who signed up today.
Yeah.
I guess because it's summer and the meetups are picking up. But I'll just continue to run it like usual. Hey Liz, good morning. Let's see, today, this is our focus today. So,
Okay, cool.
I'm sorry, so I kind of cut you off. So
No,
you were talking about Bitcoin just now?
Yeah.
Yeah, so I like Bitcoin, right? We analyze like many different segments in the stock market, everything from just like all corners pretty much, and the corners that I like the most are application software. Everything seems to kind of scream data center, though pharmaceuticals are hot too. The margins are hot. You're familiar with like business margins, where it's like, let's say you run a business, every $100 you sell, like for example at GE, the industrial segment, they make like, let's say $2 every $100, so the margin's 2%. Yeah. Not really great, right? So in my analysis of like all around the corners of the stock market, the companies that are doing the best, the top 5, like Google, Facebook, Amazon, all that, it's all tech related, it's all data center related, and software related. So those models seem to be the most aggressive, and I would just keep buying those higher. So that's typically what I do with options. Let's see if I share my screen. Okay, so we have Eli in the room right now. He's a first timer, so I'm just giving him a little introduction. But basically, disclosure to this club is just really educational. I'm just here to like network and improve my speaking skills as well as teach, right? Investing skills. There's really no, like if you really know economics, there's really no quick way to get rich quick, right? Everything takes time and you got to put in the due diligence. Though, if you do find an opportunity that makes you rich quick, it's usually a fast closing window, right? I mean, rich quick schemes is like, it'd be like a lottery. It'd be an economically unstable model, like you're scamming someone. That can only last so long. So what we do in here is majority of times we analyze stocks and just really understand the beauty of the financial statements, as well as like analyzing the charts and doing technical analysis. So for a person coming in, I don't know like how well versed you are in like technical analysis, fundamental analysis, which is the numbers. Technical analysis is the charts, and then like sentiment analysis, like analyzing volatility in the entire markets. Today's topic is going to be very broad, and so I just want to give you like a little quick overview before like maybe the other people start coming in. But this is how I view the markets in my head, right? So if you trade the stock market long enough, you know, I guess you said you own real estate, right? So you could say, let's compare it real quick to real estate. What you have down here is like the, let's say low-end properties, right? And then over here you have the mid-end, and then over here you have the high-end properties, right? So everything in the stock market is the same. Everything in the world has structure, and if you could apply that structured thinking, you could learn really quick. So in the stock market, we have mega caps, right? And then maybe I'll put another segment here, large caps. So mega caps would be like Apple, Amazon, Google. Large caps would be maybe something like a PayPal. Then we have mid cap right here, and then we have small caps. So we like to segment out the markets. So majority of the times we're talking about this, the stock market. All right, at the top, mega caps, large caps, middle cap, mid cap, small cap. Today we're going a little bit higher, so that's why I don't want to discourage someone who comes in here for the first time. We're talking, let me redraw this framework right here of what we usually talk about. We're going a little bit higher. Let's see. So today we're talking about specifically at the sovereign level, right? So countries. because countries are traders too. Like, people in here like to talk about politics. I don't really talk about politics, just because I'm not a super expert at it, and I prefer to follow the realized transaction versus like the, hey, we're going to do this, hey, we're going to do that, kind of like fake negotiations or whatever. But we're going to talk at the sovereign level right here. So it's like 10,000 feet above the world is where we're talking at. And then right in between is the large, medium, and small, which is the stock market. Right, that's the usual segment that we always talk about. Right there, stock market. And then we also talk about like SMBs, which is small to medium-sized business. At the same time, we also talk about retail, because within retail, you got high net worth or ultra high net worth, middle class, lower class. You kind of get the picture. So just want to kind of point out that this is where we're focusing today. It's very, very, very high level, because we're going to talk about central banks and what's kind of going on with the world, how we're moving from quantitative easing to quantitative tightening, basically meaning they manipulate the dollar and print money and put it into the system. That's what inflates asset prices. Everything from real estate, bonds, and stocks, they all go up because we're printing money. So when you print more money, the money kind of goes to the best players in the stock market, but at the same time, it bleeds into every other participants in the markets, every other stock in the markets. Usually from what I see, you guys can correct me if I'm wrong on this, but usually when they start printing money, the capital markets kind of react first. The stock market reacts first. So now that we're going to this new inflection point, we're taking money out of the system. Reason being is that the picture with the USA, the government debt, the central bank of the government or of the USA has a inflated balance sheet. You're familiar with financial statements?
A little bit, yeah.
So let's take a step back. Every single person has a financial statement, right? Hey, people online, welcome. Just doing like a little quick refresher today. We're going to talk about the In Gold We Trust report. Though I'll be honest with you guys, I read through it. It took me about 2 days and a half, 230 pages. But it's actually nothing that much new from what we've already discussed. So Liz, I know you come here like pretty consistently. It's funny because like a lot of things in there is everything we kind of discussed already, from Federal Reserve balance sheet reduction, the whole gold as a government hedge. Why should we? Oh, hey Shati. So it's a lot of repeat. So I'm going to kind of make it simple, but then I also want to squeeze in new topics. So for Liz specifically, I don't want you to get bored of like maybe a redundant topic. So I'd like to send you like the copy of the annotated version that I have, as well as maybe the 100 snips that I have right here. I could put this in the chat, and then, because this is really where I found like the new content. We'll probably review this in the end, depending on how much time I have today. We also have like some new people coming in, so I don't want to get too technical and kind of like discourage them from learning about the super broader economics, the macroeconomics, because we're talking about the world today. So I'll try to pass that over later on in the end, or maybe in the group chat that we have. Anyway, so taking a step back, right? So to answer Eli's question, so I said that everyone has financial statements, but we want to kind of expand this concept, right? So a financial statement is just really keep it simple, guys. You could break it down to two statements, right? The income statement and the balance sheet. So the income statement is like your salary. How much do you make minus how much you spend in a year, and that's your net income, right? That's the individual level. At the corporation level, they have it too. And all these metrics that we have right here, it just derives from the financial statements. So that's the income statement, and the other statement is the balance sheet. Your net assets minus your net liability. So let's say you go buy $1 million property right now. You have to borrow money, right? Well, let's say you borrow 80%, 800K. So immediately you buy an asset that's $1 million. So you have an asset that's worth $1 million, and then you have a liability that's 800K, right? You kind of net out, and you put down 200K. So you have a picture of your balance sheet. It's very simple when we're talking about like that. It gets a little bit more complex when we're analyzing like a company's financial statement, for example, right here. Like it looks complicated, but really all you gotta do is just know that there's two statements. Well, there's really three, but we won't talk about the third one to just keep things simple. There's an income statement and there's a balance sheet. And really, the simplicity of it, all you need to know is that it's revenue minus expenses equals net income. That's all you need to know. That basically means your salary minus how much expense you have, like bills or gas, whatever you pay for, food, that's your net income for the year. And then whatever you net for the year, you bring it back over and you keep it in your balance sheet, right? All your assets, over here in the balance sheet section, all you need to know is assets minus liabilities equals your net assets or net liabilities. If you owe more than your assets, that's all it is. So when we invest in the stock market, we want to see two things, right? When we want to perform fundamental analysis on a company, let's say someone like Apple, we want to see a solid income statement where their net income is always growing, sales is always growing. At the same time, we want to see balance sheet growth, right? Are you a balance sheet investor or are you a net income investor or income statement investor? So, you know, it's a mixture, because if you look at the stock market long enough, the way we filter left and right in the stock market, you start to see all different size and shapes of balance sheets, right? Now that's just one aspect of it. That's fundamental analysis, right? We talked about technical analysis, which is analyzing the charts. The technical analysis at this point for me, it really comes down to time frame. You have to really know time frame and what to look at. Like you see all the stuff down here. We talked about this last week. We mentioned it before. A little quick refresher. So the technical analysis is really just three things: price, time, and volume. All right, think of that as the fundamentals of technical analysis: time, price, and then the volume in the back right here. That's really all it is. So all the indicators, all these choppy things that you see, the oscillators, indicators, overlays, whatever, they all derive from the fundamentals of price, time, and volume. And so I love price patterns, or just analyzing patterns on different time frames, because I find that quite useful in the trading. So let's jump into a little bit of technical analysis, just analyzing the world. We're going to do it really quick, and then jump over to the In Gold We Trust report. So this week in the S&P 500, we did pretty darn well. Like, we got that breakout. It was a little choppy towards the end, but we broke out higher. So the next resistance that I'm kind of looking at is 280. So an example of me using price patterns, for example, let's say this we were looking at this pattern sort of right there. So that's a bull flag. But that's not today's conversation. We're not talking about patterns. I'm just showing you like a little glimpse of like how we kind of analyze. We analyze a lot of different markets just to kind of get an understanding of what's going on in the world. Anyways, real quick, S&P 500, it looks like it's breaking out higher. At the daily level, it looks very bullish. At the weekly level, which is JC's level, it looks bullish as well. So things are recovering pretty well. Another thing that we look at is the volatility curve. This is a lot more sophisticated. It's not really a beginner's thing, but we look at this curve because it's a derivative, a derivative of a derivative, right? It's very derived out there, but its actual economic size is so significant that I have to look at it, because who's trading volatility? Typically someone very sophisticated, right? And especially who's trading volatility futures, right? Which is really big contracts. Someone very sophisticated. So we just look at this, or I look at this, to kind of gauge of like, what is the sentiment? This is sentiment analysis. You heard the VIX and stuff. This is just a sentiment analysis. So this is like a short to mid-term indicator for me. A longer term indicator is like the bond market. So this is kind of like me setting you up for the conversation today. Keep in mind, this is the index. It's a very high level. A little quick refresher for people who are new or first time or don't quite understand the index. I drew this before, but at the highest level, well, not really the highest level. You could say the country is the highest level, right? Like economic indicators, or but let's just keep it simple for the stock market. When we analyze the stock market, it starts with the index. Sub of that is the sector. Sub of that is the industry, right? And then sub of that is the stock. So let's say you look at Apple. the industry that it's in is consumer goods. The sector that it's in is, I'm sorry, the sector that it's in is consumer goods. Well, let's see. Let's make sure. I don't want to be wrong. The sector, the industry that Apple is in right here is electronic equipment. The sector is consumer goods. And then the index that it's in is Dow Jones, S&P 500. So we look at the S&P 500 to kind of get a gauge of like what the majority of stocks are doing. So for people who are passive investors and people who don't really trade the markets but want to know how our economy is doing, at this point in my life, or things I've learned up to this point, and see what the pros look at, they all look at the S&P 500. So just follow this, and we apply simple overlays, which is the 21, 50, 100, and 200 day moving average, just to kind of gauge of where it wants to go. So for the past 5 months, it's been super volatile. It's been super scary for the past 5 months. But as of June 1st, second half of the year, fund managers need to perform. That's my thinking. We're kind of rallying since H2, second half. So I'm excited to see how we perform in second half. So far, we're doing pretty good. So I like to see this recover, but that's we won't go too deep into it. So a quick around the world look. Indices look good, right? Everything from the U.S. indices, Dow Jones, S&P, Nasdaq looks good. Russell 2000 looks really good. Nikkei bounce. Euro and DAX, Europe and Germany. Sort of a bounce, but a little retrace right here, and then VIX breaking down. So VIX breaking down is positive sentiment or bullish sentiment. Looking at bonds real quick. Bonds will continue. Right now we're raising interest rates. Central banks are raising interest rates, which means interest rates in bonds have a inverse relationship. So if interest rates are going up, this right here are bond prices. You see how it's going down, right? So the bond market is seeing that interest rates are going up. Now that ultimately, looking at the 10,000 feet above the air or above the world, that ultimately causes financial tightening of like the entire system. So 2018 is like an inflection point. We're moving into, like I don't know. Reading the report as well as like hearing what the Federal Reserve is doing, 2018 is the year where like we're really initiating quantitative tightening. We're not printing money anymore, which means we're raising interest rates. We're not lowering interest rates anymore, right? So this puts a tightening on everyone. Like people who want to get a mortgage to buy a home, interest rates are going to be a little bit higher. I mean, you might be like, oh, it's just 0.25%, but over 30 years, like, it could be a significant amount of money if you're purchasing a very expensive home. So it's putting a lot of tightening. I don't know. I don't want to say it's the top, right? This is all for educational purposes, guys. We do this to all train and get better, and for me to network with you guys and just really figure out what makes sense in this crazy economy, Silicon Valley, right, with all the major tech corporations around, causing real estate prices to go up. So going back to the bond market. So the bond markets are telling us, we got the 30-year, the 10-year, the 5-year, and the 2-year. It's telling us, since it's all pointing down, interest rates are kind of wants to go up. So we will monitor that. A great way to kind of monitor it from a very macro level is we use the dynamic yield curve, which we looked at last week. Now this is important because it kind of integrates into today's discussion, right? Because this is the super high level overview. Oh, what am I doing? Stock charts, dynamic yield curve, and yield curve. Okay, so the dynamic yield curve is basically, if you analyze it closely, this is the curve right here. Very similar to the volatility futures curve, where each node right here is a contract. Over here, there's no node, but you got the 3-month bond, the 2-year bond, the 5-year bond, 7-year, 10-year bond, right? Which is basically what we just analyzed here, right? The 2-year, the 5-year, the 10-year, and the 30-year. It's just in the form of a curve. And the way this curve behaves is, right here on the right, we have the S&P 500. So if we backtest this, last week we looked at it, right? Every time that this curve inverts, meaning it looks like this, this is one of the indicators that the investors use to kind of gauge a market recession or great recession or whatever. So when it inverts like this, we get a signal of like, okay, things are not looking too good. So we had 2 inversions. right here as well, kind of inverted right there, and then down we go, right? Inverted and down. So we talked last week. As of recent, we don't really see any inversion. Huh?
What happens in the bottom, like the first peak, first bottom?
Yeah.
It's still going
So
up.
interest rates go down, right? Keep in
Okay.
mind what you're seeing right here is the action of the yield curve, right? Not just the shape of it, but this part right here, the direction, is really interest rates. Are interest rates going up or interest rates going down? If interest rates are going up, then we're taking money out of the system. But if interest rates are going down, then we're putting money into the system, thus inflating asset prices. So if you're going to be a trader in the stock market and you know that we're pumping money, then you might want to be long biased, right? Like let's say a shitty company might in a inflation or in a low interest rate environment, inflationary asset prices or inflationary environment, asset prices are going up. Maybe a shitty company might be doing a 1x growth, but a great company might be doing like a 5x growth. So that's the relativity that you kind of see after looking at the markets for a while, if that kind of makes sense. So as of most recent, interest rates are kind of going up. So we could look at the most recent. See how it's kind of going up? Looking at right here, we're looking at this corner or this end. It's rising up. Oop, darn.
Right.
So it's going higher. So that's the concern, right? Because in the past, if it goes too high, it inverts and then we kind of go down. Because it seems like capital markets, the stock markets are sensitive. Yeah, because interest rates are going up, we're pulling money out of the system. Financial tightening. So a little quick refresher, what happens when we raise interest rates? A while back, we played a Monopoly game. I brought in a Monopoly board. Steve was here and 3 other guys. Well, there's more people than that. But basically, we did a little model showing that I was a central banker in the Monopoly game. Let's just pull up a quick Monopoly board. You guys play Monopoly? You guys know Monopoly?
Yeah.
Because I mean, some people might not remember Monopoly or just don't. So I brought in a Monopoly board and we kind of I modded the rules a little bit. I made the game a little bit quicker and I became the central banker. Basically, I was pumping money into this game. So there were 4 players, right? And they all start at the go. And they would roll their dice and whatever property they land on, they would buy it. And then every time they pass, you know how you get paid 2,000 whatever right here? Every time, let's say 1 year passed, you get income, right? Every time they passed the go, I would inflate the money. I would start giving them a ton of money. And so when they started bidding against each other, they started bidding the asset prices up. So the thing that we didn't do is, that was just the first half of it. I didn't have enough time in here to perform the second half, which is pulling money out of the system and see how they actually respond to the situation. But that's so critical to know because, you know, going into 2018, we're starting to pull money out of the system. So I'm not saying we're going to crash, okay? Educational purposes only. I'm just saying that you got to pick the best investments moving forward. You got to be a little bit smarter moving forward. There's no lazy investor anymore, where you just kick back and throw money, and then you might benefit from everyone getting inflated up. You got to be a little bit serious, in my opinion. So I'm not going to say there's a crash or anything. We might not see, like, markets are lagged, but at the same time leading. Like, when you hear, good news, the rumors will take it up, right? And I don't know, I just feel like for the bad news, it kind of just, we keep going up and then the bad news kind of reacts in like 1 day or 1 week. So it's just the nature of the game, how you want to approach it. So again, guys, I hope, teaching all this could help you guys improve, help myself improve, and just make something out of it, right? But anyways, that's our quick around the world look. Let's look at energy real quick. Crude oil for past day, right? Little bottom right here, nothing much. Grains, corn broke down. Ooh, I also want to talk about cryptocurrencies real quick. So look at that. Look at that. Yeah, let's pull up my trading view. Man, I had to liquidate last night. So I was swing trading Ethereum, and I got in like about 2-3 times this week, just because it kind of hit the model that I was playing. But the moment it broke 600, it didn't hold. just want to point out how it looks like, right? How we use patterns. So this is the 4-hour chart. This is what happened last night. It broke right there. It didn't hold 600. So my personal motto was, if it's not holding 600, I don't want to be in it. And then the next day, and then you got another pattern right here, a little mini flag, reverse flag, which is a bear flag or bear pennant, whatever you want to call it. So continue down prices. What do I think of cryptocurrencies? When reading the In Gold We Trust report, for those of you who don't know, last year we read the 2017 report. These guys are a serious fund that manages serious money. Last year we read a 2017 report. They talk about how gold is a great hedge against what's going on with the government right now, or what's going on with the world, not just our government and our central bank's balance sheet, but the entire world. Everyone's kind of, you know, they call it the everything bubble, where bonds, real estate, and stocks are all at all-time highs. It's true, right? We pump so much money. You know, where it goes next, I don't know. It might be like a new fundamental thing. But anyways, the report increasingly started mentioning more about cryptocurrencies this year. If I go to the table of contents of this report, about two chapters on cryptocurrencies, and they, you know, are cryptos a friend or foe to gold? Like, would you guys buy gold? What's your guys' opinion on gold, just out of curiosity? Any take?
I have more faith in gold than in cryptocurrencies.
You have more faith in gold? Yeah. So I'm not going to go over the specific part of cryptocurrencies in the gold report today, but they did talk about how the issue with gold is that the application. So with blockchain cryptocurrencies, they're coming up with there are projects out there that's trying to in some way use blockchain to tie the application of gold into daily use. Because right now you don't go to Starbucks and give gold for like a cup of coffee, but they're trying to tie that with blockchain, where you're going to use blockchain, cryptocurrency or whatever, to actually use it that's tied to real gold and transact it at Starbucks. So that's a development happening there. It talks about it in the report. I won't talk about it. I could send you guys the report too. It's 230 pages, but I really just highlighted the chapters that really interest me, but then it's a lot of repeat of what we already talked about. These macroeconomic things are slow moving, and so me generating content over and over it's like the same content that I'm just flipping over and over. Well, yeah, that's the report for you. So very, very interesting that they brought up cryptocurrencies this year. So Steve made a comment that he has more faith in gold. I would agree. After reading the report, my views have changed a little in terms of like our government deficit. We'll acknowledge that. So Eli, that was sort of my high-level overview. I'm not sure if that was like a little complex for like your first time here. Let's quick talk about cryptocurrencies. My opinion on it as a millennial. Right now in this world, like every asset corner of the world, everything's kind of overpriced. And so we talked about how what upside do millennials really have in wealth creation. Millennials are truly screwed in a way if you think about it hard enough. And so, I mean, you could say we're screwed. I'm 27. You say our generation is screwed, but kind of, right?
I think so.
Are you 27 too?
No, I'm a little bit older, but
Okay.
yeah. I think everything is overpriced.
Yeah, I don't know. Okay, well anyway, so cryptocurrency makes sense to that generation, the millennials, because like I said, if you look at Intel, they're changing their business model away from personal computers and going straight data center play. Data center is a big macro trend. You want exposure to that market right now. It's growing, right? Whether it's a REIT, right? You guys remember Digital Realty Trust? The top performing REIT stock is a data center related real estate stock. Right? I could show you proof real quick. Let's see. We'll filter it by just the REIT office. The highest performing one, we use market cap to define that. The highest performing REIT one is right here. DLR, Digital Realty Trust. And if you look into what they do, it's data centers.
Oh.
So, customers are probably like Microsoft, Amazon. It's the biggest play. And the more that we analyze the structure of the company, we start to realize like, yeah, you could go out there and buy a cafe, right? But the moment that you want to become a Starbucks, right? Because you want more money, because a cafe you might be capped at like 300K, maybe 400K, depending on how well you run your cafe and how big the parking lot is. You have physical human limitations, right? Because you want to scale, you gotta get another location. That's what I'm seeing with some of the milk tea places around here, like Happy Lemon. They're aggressively scaling. But, at some point you're gonna, let's say you scale to 3 shops, 3 cafes, at some point you scale to 5, 6, 7, 8, or 10. Well, you're gonna have a database, right? Or collect some data, run some analytics. I don't know, it's gonna get to a point where you wanna manage from afar. So it just makes sense that if you wanna break out that SMB level, that middle market, and into the middle market level, as a company, you gotta have a database. And with that comes with software stack, like, infrastructure, platform, and application software. It's interesting. That's why I talk about, let's say, if I wanted to run that real estate business, I'm going to be building I'm going to leverage enterprise level software to go beat the other real estate guys. It's all competition, baby. You got to go out there and strike deals or whatever to, I guess, survive. But that's kind of my opinion of it. So breaking down, so Ethereum, breaking down, my fundamental view of cryptocurrencies, again, guys, is I'm seeing the shifts in these major enterprises going to data center play. I'm seeing everyone having a phone. The infrastructure makes sense. For this not to work, this needs to disappear. And that's, our connected world needs to disappear for this to disappear. So that to me is the robust
You mean
infrastructure.
cryptocurrency to disappear?
Yeah.
How is that tied so closely with phones? I mean, it makes sense.
The liquidity, the transaction, the application, right? If there were less phones out there, let's say we remove 90% of the phones. Well, the transaction is only going between that 10% of the phones out there. Or, this is essentially a very powerful device at this point. Right? I trade on here. I analyze like commercial real estate markets on here through an application. It's very compelling, and it's also the only upside asset for millennials right now. So,
Can you pull up a chart for not Ethereum but
Bitcoin? Yeah. You want like the bigger picture view?
Yeah, like long term.
Oh wow, look at that. Damn.
So everything is going down in last 1 hour, 1 or 2 days.
Well, look, this is what you could say. Yeah, we're going down, but long term we're still up.
Yeah.
So this is the monthly. I don't know if you want a different.
No, it's, maybe like a weekly.
Okay.
Okay. So it looks like we are at support in
7,000.
yes.
Let's just keep it simple. Let's not make it complicated. Just
Yeah,
say I say 7,000.
Yeah, so 7,000 is like support. So if it breaks this,
Then we go lower.
yeah.
Yeah, that's what I'm seeing.
And it doesn't look, to me, it doesn't look optimistic. It looks like it's,
Going down.
banging away.
So the chart, yes, that's a great analysis. So the chart says something else. And we see that a lot with the stock market, right? Like, what the hell? This company is trading at a PE of like 250, but Amazon keeps going up. So that's the chart analysis. So the real-time market right now, which is the charts, is saying it wants to go down, right? Now, on the back end, or the fundamentals, we're seeing Andreessen Horowitz funding CryptoKitties $12 million. That's a small project. 12 million is small. But they're funding like applications. It comes down to application. But we gotta watch the market in real time. Like,
Would you say there's an inverse relationship between the price of cryptocurrency and the stock market? Like as stocks go up, cryptocurrency goes down.
I don't think so.
I think they're unrelated. Unrelated.
I might say inverse relationship between the dollar and Bitcoin.
Dollar. Okay.
Yeah.
So dollar goes down, cryptocurrency goes up.
Yeah. Wait, is that right? Yeah.
Meaning a weak dollar strong cryptocurrency.
Yeah, because
strong dollar.
we're trading our dollar in for another currency.
Yeah.
All right, now this is great thinking. How we're gonna. What I learned from reading that report, guys, the newest thing that I could teach you or share with you that I learned is that you could go and read about all these political debates and stuff, right? But I found the real secret, not the secret, but the real way to analyze it is just to look at what the sovereign is holding. That expression, whatever they decide to buy, if China decides to hold more gold and more dollars, that expression screams louder than what they say in the news. Does that kind of make sense? If you analyze a person's portfolio, it's their belief. So when we look at venture capital firms like Sequoia Capital, I want to see what they're invested in because it kind of screams that macro trend that I'm trying to look for. So I see a lot of infrastructure investing into like data centers and stuff. So I'm aggressively bullish on that. But you gotta break it down to like, okay, data center play, where can I invest within that segment? So, but hey, to me, if Bitcoin can go down further, I'll trade it. Even if it goes to zero, I'll figure out how to trade it. But right now, it's just not for me to be in. It's breaking down right now. Real quick, let's look at that model. So the conversation so far in the past 45 minutes, we talked a little bit about like the macro and like the current and stuff. I hope it kind of bleeds into what we're going to talk about today. So this is the model that I've been playing, right? I know Neo Steve is probably not online.
Who?
So there's this guy named Steve, because there was this
Okay.
one time where two Steves were on, Steve here and another Steve, and I was like, is that Neo Steve, or is that Steve or the other guy who likes Neo, the cryptocurrency? He calls himself Neo Steve. But last week we talked about the model, right? 4-hour time frame and the 20 and the 50-day moving average. So it broke right here. I'm not in, right?
Yeah.
Yeah. So let's see how far this market could break down. It started breaking down as of last night. I was at a family party last night and occupied with that. Because you just gotta close your position. I'd rather lose like a couple $100 rather than like a couple $1,000. Anyways, so that's the model right there. Just want to show you guys that it like the style I trade and how it works. Let's jump into it. So again, guys, today, I'll be honest, I've been super busy this weekend with family. Cousin had a graduation, so I want to make this more conversational as my doc is not that great, but I hope it could benefit you in some way. So after reading this report, reading the 2017 report, 2018 report, in conclusion, gold is straight up a government hedge. But me saying that to someone, you might not understand, like, what do you mean government hedge, right? Depending on how big your view of the world is. Earlier we talked about the financial statements, the income statement and the balance sheet. The government balance sheet, what was that, like 20 trillion in debt? 20 trillion in debt, and the income statement where they have more expenses than income. Let's say you make 100K, but your expense is 200K. That's what the government looks like right now. So the rest of the world doesn't like that. But I learned that our government deficit might not even matter. Did you guys hear what I just said? Like, is that crazy? Like, the government needing 200K, expensing 200K when they make 100K, it doesn't matter. That's what I learned from this report, and I'll kind of share why. Because the rest of the world uses the dollar as a reserve currency. So let's jump right into it. So I just explained to you that today's talk it's more of an expansion of our existing market segment framework, right? We're not talking about enterprise level stocks, middle market stocks, or SMB businesses, or retail deals, right? High net worth people. We're not talking about any of that. We're jumping higher than enterprise today. We're talking about the sovereign. Because this report taught me that you have to look at what the sovereign is holding, their portfolio holdings. Is the macro the direction? I geek out to that.
Sovereign meaning?
What is Singapore's fund holding? What is China's People's Bank of China holding?
Okay.
What is the Federal Reserve holding? Right? What's Japanese central bank holding? What is the European Central Bank holding? Because what are they holding? If they're all holding dollars, then they trust the dollar. If they're all holding U.S. treasuries, then they trust the dollar. So forget the whole like if you think the political news is too noisy, let's just jump into more objective indicators and look at what are these sovereign funds holding, right? Now, for us small-time retail investors, I mean, this is all educational. If you're gonna play forex, trading bonds at that level, or currencies, bonds, and gold, if you're really gonna play that, I've learned after this report, it's really a sovereign's game. It's a giant player's game. So that's why I focus on the stock market, because it's like our level's game.
Yeah.
It's like me trying to play a super high rollers poker game, but you're just not at that level. But I want to analyze this level today, the sovereign level today, to get a better understanding of what's going on in the world. And so I came down with this. You have to understand the monetary system. I know this is kind of an ugly drawing, but I'm gonna try and build on this, right? And like, I'm hoping this image right here, instead of you going out and reading the 230-page report that I read, I'm hoping this image right here will just explain exactly that. In one image, right? It's super aggressive, but I'll try. So right now in the world, this is sort of what it looks like, except this, okay? And you kind of have to understand your countries, your continents in the world, right? I need to draw something real quick because I totally forgot. Japan's a major economy, right? And you see how I'm linking it all to the US dollar, right? So in the report, we talk about, so you have to understand that the US dollar itself is an asset, and it's all about, are the people using the US dollar? That's what the sovereign cares about, right? If you own a country, let's say you own a Bitcoin continent or a Bitcoin island, you want the people of the island to use Bitcoin as your currency, right? So that's exactly kind of what I saw in the report. And so over here you might have the euro, right? And then over here you have the Japanese yen, and then in China you have the renminbi, right? And then over here in Southeast Asia, let's say Singapore, you got the Singapore dollar, right? And then I don't know what the African people trade, but their currency. And then South America, right? So all these different currency, they are at the hands of the dollar. This is the current system, right? And if you go back before, okay, I'm gonna draw a line right here, right? Over here is pre, right? And over here is post World War II and pre World War II, right? So right now today, 2018, it's this. 2018 is right here. Okay? Now this, if it gets too complex, let me know. 2018 is today, where the dollar is not tied to gold, right? But pre-World War or Bretton Woods meeting, it was tied to gold. So after that World War II or the meeting, we disconnected from gold, right? And we jumped to a new system. I put S1 because this is the monetary system of the world. So right now we're in this system right here, where after the war, everyone was distressed. Every country was distressed except for the U.S. The U.S. had the most gold, had the most factories, had the most oil. What else did they have? And the most military power, right? And so the world had this meeting at this place called the Bretton Woods. And in that meeting, they all talked together like, hey, okay, we gotta stop fighting with each other or whatever, right? Like, or we're done with the fighting. How are we gonna rebuild the world? And then basically they said, well, we need a single system, or we need a currency system. So the system before was, they decided with the system to be, since the U.S. was the most dominant in terms of like economic resources and standing, they became the dominant one. And it was tied, and that dominant currency, the USD, was tied to gold. Where's my mouse? Tied to gold. And so everyone else is kind of, their influence, they get influenced by the dollar, and the dollar gets influenced by gold. But after, after some time, they decided to disconnect the gold from the dollar. And that's the major point right there, because the moment they did that, they gave the U.S. the power to manipulate the rest of the world by manipulating the dollar. Because everyone's, the dollar is the world currency that's they're using to transact commodities like oil and stuff, right? And so the moment they did that, they gave the power, the U.S., the power to manipulate the dollar, the supply dollar that everyone is tied to. Isn't that insane? So that's where we are today, and they call that fiat currency. You guys probably heard of that, right?
Yes.
What's that called?
Fiat currency,
Yeah.
where our currency is not backed by anything but besides the government saying that, hey, it has value, use it. And because of the economic standing. So that's the current system that we have today, where gold is, where's my mouse? Gold is not tied to the dollar anymore. And so the dollar is kind of free floating, but with manipulation. And we manipulate it in a way that the rest of the world doesn't like, right? Europe doesn't like the way we manipulate it, Japan, China. It works. It worked for some time, but after 2008, when we had the financial crisis, everyone was like, dude, the US messed up because they manipulated the dollar and it hurt everyone in the world. So now it's a slow moving process, but this monetary architecture needs to change. So that's what the report kind of emphasized. Does that kind of make sense? How now you have a little bit better understanding of how the dollar works. Now we're going to expand that into understanding other systems out there, right? Because this is just S1, system 1. We could have different systems where it's not tied to gold, but it's tied to maybe a system of 3 commodities, right? Like other commodities, oil, like a basket of commodities, right? We could have a system where everything's tied to Bitcoin, right? Turn the US into blue, right? And everything's tied to Bitcoin. I know it sounds crazy to say that, but if you just be creative and be a little speculative for a second, there's a moment in that report where my hair in the back of my head kind of stood up because I started thinking like holy crap, the U.S. balance sheet and their Federal Reserve balance sheet, it's expanded to its limits, and at this point they say the U.S. is at a point where they have to pick the worst, the lesser of 2 evils. No matter what step they pick next, it's both going to be bad. But they got to pick the one that's the lesser of the bad, right? And so my hair stood up because it's like, wow, it's not just the U.S. because China's balance, central bank's balance sheet is pretty inflated too. There's a chart in here that shows it. I know I'm talking a lot more than going through these reports, so I might be going everywhere. But here's the People's Bank of China's balance sheet. This is the equivalent of their central bank's balance sheet. You can see how inflated it is. And then if I could find a picture of our Federal Reserve balance sheet and where it's going. A lot of charts there, I know. So this is the Federal Reserve right here. Every time we print money, right, it's called QE, we print money. This is the Federal Reserve central bank balance sheet. Every time we print money, it goes higher and higher. And so we're trying to take money out of the system. So knowing all of that, my hair stood up because we're at an interesting economic setup, I like to call it. It's like a chess game where all the pieces are aligned. The stars are aligned, and how things move next could be very, very interesting. Because why is it interesting? Why did my hair stand up? Let's say right now there's this thing called the de-dollarization. The rest of the world doesn't want the dollar to be that main currency anymore that kind of manipulates everyone else, that kind of pressures everyone else to act in a certain way when they print or reduce the dollar supply. And so China and Russia are buying gold, right? But the people who have the most gold is the USA. Right? It's an interesting setup. And so how do you China's rising, though they don't want to be the reserve currency. They just want to be up there. Everyone wants the dollar to have less influence as a reserve currency. That's good for us as a people because we don't have a government that's recklessly printing money, that's devaluing our hard-earned dollar. Does that kind of make sense? So the setup is in a way where I see the incentives for China and Russia to buy gold, But then like if they want control of the world, there's this new thing called Bitcoin that came up out of nowhere. That if super speculative here, if they decide to say, hey, like, okay, Russia, China, if we're gonna buy gold, they only got about 2,000 tons each, right? And U.S. has 8,000 tons. How are we gonna beat the U.S.? All right? Because at the end of the day, it comes down to what does the entire world want to use as the reserve currency. So it's kind of funny how Bitcoin kind of came in, and if you were to speculate that Bitcoin is going to become the reserve currency, then I just thought like, damn, like if that's the case, then like let's say anyone purchasing a Bitcoin right now and it becomes a reserve currency, you just purchased like a unit of global monetary order, man. Like that's insane, right? That's super speculative. This is educational purposes only.
Where would the price of Bitcoin go?
So right now Bitcoin's at 350 billion, which is like 7,000 a unit, right? Gold right now is at 20 trillion. So if you were to multiply that out, 21 million a unit, I think. Wait, is that right? Let's do the math.
Is that what they're speculating?
If
Yeah.
Bitcoin were to be the same size as gold, so let's do the math real quick. Let's go to coin market cap. Right now the real time size is 340 billion, right? Guys, I don't want you to get like super like money hungry and go buy Bitcoin.
Yeah.
You have to perform risk analysis on the charts before you get in. Know what you're doing. This is not a recommendation by ourselves. This is just purely like expressing individuality, because it's the herd that we want to move away. We don't want to follow the average people, because after some time our individuality, the leaders of the world have individuality, and eventually the followers will catch on and follow that person's individuality. So it's expressing leadership, right? So if we were to multiply that out, right now Bitcoin is at market cap of, let's just say 100 billion, right? So 10 times this price would be 1 trillion, so 200 times. So the price right now is 7,000 times 200. Then it'd be the equivalent gold.
Yeah, which is like a million plus.
Yeah.
But that would involve Bitcoin becoming the favored world
Yeah.
currency.
Yes.
So
Which is not like,
so
Not
so
realistic.
yeah,
it's not realistic, right?
because it has so many flaws.
Yes, there's so many flaws.
Something else. Like
But the economics is so interesting to me, because it's like, you know, not just us people here in Silicon Valley, but people who want to accumulate wealth, countries who are trying to preserve their currency. Everyone's cornered right now. Everyone's pushed back. It's tight. People who don't care about this stuff don't see the tightness, the pressure of things, right? It could keep going. The pressure could keep getting worse. But it kind of sets up for, you know, this. Like I see it because like the millennials among me, right? Like that's all they know. They don't know anything about gold. They know very little about stocks. But the stocks that they do know are like Facebook, Google, and Apple. Right? They know those brands more than like Morgan Stanley and Goldman Sachs. So it's just, if you want to invest in the people of tomorrow and how they behave, Bitcoin looks like the way. But I'm not gonna say that's the answer. Right? You have to express your own individuality. But just going back to why my hair stood is that every economic player, from sovereign to enterprise, well, maybe not really enterprise players, but sovereign players, they're cornered in a way where, you know, if I see the central bank, let's say China or Russia or Japan or even the European Union, they decide to let's hold a little bit of cryptocurrency, dude. That news is major, okay? If a central bank decides to hold that. Now, let's look at, gold makes sense, right? But I have another chart. Oop. Where is this one chart? I'll show you. Right here. So this is a chart showing the difference between advanced countries and developing countries. Developing countries would be like Indonesia. Advanced countries would be like European Union, Japan, USA. Look at the holdings right here. Other assets that they hold as a country, the advanced countries hold gold. Because it's like, everything I taught you about like stocks and stuff, like how Apple is the dominant player and every startup that comes up, they get acquired by like Apple or Microsoft or Amazon. Right? You hear all the acquisition news. Think of it now at the country level, right? How does the advanced countries like the US and stuff flex their their ability to influence the emerging countries who are also allocating economic power because their economies are booming. How do they flex it, right? So I guess they own gold in case like, the rest of the world doesn't like what they do anymore. So it's sort of like a hedge. But then like, what if the rest of the world kind of makes like a 180-degree turn and go, hey, cryptocurrencies? Then that's kind of scary. It's scary. It's extreme. What I just said is extremely speculative, extremely bullish, saying that the global monetary order is going to be a cryptocurrency. Right? Like, let's say that did happen. You could be like the dude who's like, oh man, I own like a unit of that monetary like currency. One day down the road, right? You're like, oh, I can't believe I had that many units. But it's highly speculative. So in the report, and we talked about this report before, they said that there's a chance that the reason to own gold is because everyone's pushed into this corner. All the sovereign players are pushed into this corner. That if we lose trust in the U.S. will go back to pegging to the gold. So what I drew over here, they repeg it to gold, and then everyone's like, all right, now it's like, because we as the U.S. we expand our balance sheets and our income statement to like ridiculous levels, but it doesn't matter because the rest of the world listens to us. It's like you lending like 100,000 to your buddy, right, who's like super buff, and you're like, hey buddy, I gotta get, when you gonna pay me back? Well, I don't have money today, but is next time okay? It's literally kind of like that right now. So there's if let's say the U.S. decides to connect it back to the gold, then gold price is going to go up. And so that's what some hedge funds are betting on, right? If you want to operate like a hedge fund. So it's just an interesting thing to know. You guys have any comments on that, or does it give you a better visual of the world?
So if hedge funds are going to be moving towards gold, and these countries are moving towards gold, and it becomes, you said hypothetically, if they were to tie the currency to gold, what happens to the rest of the stock market, everything else?
Nothing. The game goes on. The only reason why we disconnected that tie to gold is so that us, the U.S., could manipulate the supply. Because by manipulating the supply, we could control our business cycle. Right? If we're in a recession, we could get out of it by printing money. But now, like everything's like so hot, we need to pull the money back so that we have they call ability to print money again later, ammunition for later.
Yeah. So if they go back to gold, the U.S. won't be able to do that anymore, right?
Well, so the conflict here is like the U.S. holds the most gold. I have that chart, which is kind of funny, right? Look, this is the countries with the largest gold reserve. USA has about 8,000 tons. So to me, it's like if we go back to gold, well, what difference does it make? We own that gold already.
Yeah.
So that's why I'm saying like, okay, if like the rest of the countries want to cut a corner and say like, dude, all right, if we all buy gold, what's the point? The U.S. already owns the most. What global currency is out there? Oh, this new thing called cryptocurrency. So if they cut the corner and buy that, then it's like, oh shoot, like the U.S. it's a sovereign competition, right? Because it's competition for people to use their currency, and it's about who owns the most of the currency. So it's aggressive, because if you own, let's say you own the currency, let's say you own Bitcoin, and everyone has to transact in Bitcoin. Like, you got leverage, bro. The world setup is amazing.
So China or Russia could at one point just be like, all right, well, we're just going to buy cryptocurrency.
So that's what I was saying. Going back to what I was saying, it's super speculative, but if they're going to cut corners and try something new, because we're already at, look, they call it the everything bubble. We're already at, we've never done this before. This is unprecedented. So this is the everything bubble, guys. I mean, you could go study finance right now, get a finance degree, but I like to joke that it's a financial history degree, because you go out there and apply, it's all outdated. So everything's all like at highs right now. Now it makes sense because,
What?
Yeah.
What is the gold line?
Oh, I'm sorry. It's the GDP, compared to GDP. So every time it stretches too far away from GDP, it kind of mean reverts, and then we'll start pumping the money again. So it's interesting. Like, I admit, like, it does seem like, okay, I say this situation never happened before, so we don't really know what's going to happen next. there's no textbook to talk about it.
So the way that they would pump money back in is a quantitative easing, right?
Mhm.
But we can't really do that anymore because they've already kind of maxed out
Yep.
that credit
Yep.
card. So
And-
when
and-
it corrects,
Yep.
what else are they going to use to do quantitative easing?
Exactly. So they have to do it now to raise their ammunition. And this is the chart right now. They maxed out because this is their balance sheet. We talked about the dynamics of the Federal Reserve printing money before, but this is where they printed money, and you see how it kind of topped out? They need to reduce at this point. This is what they need to do. Because if they don't do this, you gotta, the buff guy that flexes, right? Hey, I need to borrow another 200K. At some point, you're gonna be like, no, right? So the rest of the world's kind of like, hey, if you keep printing money, like, we're gonna hyperinflation, right? The stock market's gonna go to the moon.
What is this thing exactly?
I'm sorry. So this is the central bank total, their balance sheet, Fed balance sheet. So if you understand the dynamics, this is them accumulating treasuries. You have to understand the dynamics here. So if their balance sheet is inflating, that means they're buying more bonds. Yes, they're buying more bonds. And so they're pushing more money. So when you buy a bond, you give money and you take the bond. And so that bond is an asset. So your asset's inflating. So this is how much they inflated over the years. And now they need to taper it.
Wow.
So last 3 years it's constant.
So, I mean, man, so real estate prices or stock market prices, since like what, 09? Like, if you didn't see them printing money, you didn't catch that move, then the next one, there'll be the next one. There's always, the cycle happens over and over. I like to say that, guys, like, don't get bummed out that you missed a trade or an awesome company like a Salesforce, you didn't catch that great $50 billion move or whatever, because the hustle repeats. The game, it's like a Monopoly board, all right? Just go back to the Monopoly example. Once the game is done, we close it. We could open it later, play another game. So, like I said, there's going to be, like, I'm going to grow old. Young blood's going to come in and take up where we left off. The game's never going to end. You ask me where's the stock market going? Well, it's never going to end. It's just we live in this rare moment in time when the universe and okay, that's another topic. But we're in this moment in time where it's like just be thankful that you got a chance to live and breathe and go enjoy things in life and learn about the world. So the stock market's not going to end. Don't get discouraged. Just my take is sharpen your investment weapon and go out there and have some fun, right? Test your theory. If you think price is going up, bet up. You think price is going down, bet down. Make money on the downside. But it's the constant practice and training that I think really makes you more confident. The way I see it is, if you're fearful of something like trading, then you need to learn a little bit more. Because I used to be super fearful, man. Like, but it's funny because my first trade ever was an options trade on Amazon. And it was in the train too. But anyway, so that's the current situation of the world, guys. That's one system that we talked about. Now I want to talk about a few other systems. So I told you about the dollar-based system where everything's tied to a dollar, but then there's also the gold-based system, a system where all currencies are tied to the value of gold. Keep in mind, we could be creative with this monetary architecture or system. We could do, they talk about something called a special drawing right, SDR system. Basically a system where it's like a basket of 5 major currencies and we trade off of those 5 major currencies. Very similar to this thing called Bancor. I don't know if you guys heard of that. Anyone? It's just like the IMF came up with the idea of like a neutral asset or a neutral currency that everyone would use to trade with the rest of the world. It sounds kind of like Bitcoin. But it's not. But like they came up with the idea of Bitcoin, but Bitcoin came from like another end of the world. So we'll continue to monitor the Bitcoin market, because if this market keeps escalating, then I mean,
Bitcoin is crashing.
yeah.
It broke 7,000.
Oh yeah.
6,800.
Yeah. Yeah. So it's looking scary, huh? I just don't touch it right now. Wow. Oh wow.
Why do you think the cryptocurrency is tanking so much right now? What are the
Yeah.
drivers?
If I were to tell you from technical analysis, it's a price breakdown and like an immediate like, oh shoot, it's not holding this price level, people will start selling
Yeah.
that
Yeah.
that specific price level. But
In
it's
general,
really
drivers, like
it's really
emotional
time.
drivers.
It's really time. Time is what will tell. Like I'm not gonna.
I think it will hold though at 6,000 level. I mean, it cannot hold up.
Yeah, the next thing to test is 6,000. We had a 6,000 test before.
Yeah,
But it's
couple
just
of times. I think.
it's just looking really bad right now.
Oh, you think that might break too?
Yeah. It's breaking down on Sunday.
Uh-huh.
So the way I see it is, you know, it's not the end of the world, right?
Yeah.
This game's gonna keep happening, right? You're gonna have another millennial who doesn't know like prices, and they still believe that they want to buy Bitcoin. So you never know. You might see pressure coming in, buying pressure. But we'll see how it goes. It's not the end. If it is, then shoot.
Just kind of like the,
Blockchain is not disappearing.
if the U.S. were to default on a lot of this debt, what happens to dollar? And with that, what happens to Bitcoin?
If U.S. So who owns the debt? We do. Majority of the debt that we own, like 50%, is owned by us, the people. It's that. That's what I'm saying. Like, are we gonna let this big buff dude pick on us? It's how long we want to take it, because it kicks back. Their printing of the money, their accumulation of debt kicks back to us in terms of taxes. I feel like taxes are like hidden, everything all together, consolidated, like about 50%. Would you guys say that's right? Or
Sorry?
50% is the tax on like everything?
Yeah, yeah.
I feel that way, but I mean it's 40 or whatever, right?
Yeah.
But then
20,
sales
depending on
tax
your
is there.
bracket.
Yeah.
But I feel, yeah, sales tax, investment tax,
Add
capital
up
gains
all
tax.
of them, then it will be pretty much.
Yeah, so like I said, we're pushing everything to the edge, and I think at one point or another, someone's gonna, that individual with that individuality is gonna stand up and say, hey, we gotta fix this. So let's see how things play out. But keep in mind there are other systems to think about, right? And think about, keep in your mind as you become a better investor or trader that, oh, there's also a monetary player out there, and they're coming up with that monetary architecture. They're coming up with a new system. So the way I see it, these Bitcoin people, cryptocurrency people, they're all about creating that next monetary architecture. But yeah. So any comments on the monetary system, guys? We're gonna jump to the next part real quick, which is pretty much what we already discussed. The world's reserve currency. So the dollar's rise to dominance, I mentioned that it was post-World War II in the Bretton Woods meeting. USA had the most resources, therefore they became the best. But then it really turned out, you know, they used the dollar as a weapon to kind of pressure, not really, influence what other countries have to do and kind of adjust for them to benefit our own economy as well as the rest of the world. So this is where I came up with the idea that the U.S. deficit really doesn't matter because the USA monopolized the system, right? The deficit is if you guys look up the government's CBO, Congressional Budget Office, they show a projection of how much money the government needs, and like 2018 beyond, it shows that the government needs more money, therefore meaning more taxes. If they can't get taxes, then they got to print more money, right? We don't need to charge taxes. We just print the back end. Does that kind of make sense? Like let's say you're a billionaire, right? And you think you're smart in terms of I'm not going to pay, I'm not going to spend, I'm not going to do anything. I'm going to hold my money, right? You got $1 billion. You're not going to spend so they can't take your money through taxes. You're not going to invest either because you already got $1 billion. But they're like, okay, well, they turn the other way and start printing money. Your $1 billion is worth less because your buddies, you know, they invest because of inflation. They print the money. Yeah, so it's they don't need to take their money. They just need to print the money.
Without weakening the dollar, is what you're saying.
That weakens the dollar when they print money because you're lowering interest rates. That weakens the dollar versus now they have to raise interest rates, which strengthens the dollar. But it's like
also printing more money. At the same time also.
Removing the money if they're raising interest rates.
Oh, raising interest rates.
Yeah. So it's just a dynamic you kind of have to sort of understand in your head. But keep in mind that the dollar has been used kind of like a weapon. The way the report talked about it. I do have a quote here. I have a ton of quotes. I had trouble like coming up with ways to present this 230-page report. I figure these are my highlights from it. I can send you my annotated read as well if that's something you want to look at. But I'll send you my snips. There's about 92 snips, 96, and you can just read that, and it's like the highlights, the best parts of it that I found interesting. So here's a quote. De-dollarization is not about waging a currency war. It's about the cautious reorganization of an outdated monetary architecture toward a new system that is balanced from the perspective of all major powers, and that can serve as the foundation of a multipolar global economic order. So this is very historical times. Like I'm starting to appreciate the world history a lot more after reading this report. The main goal here is to move away from the concentration of power in the dollar and gain independence. Again, so this is the gold reserves, right? The countries that are holding gold, the U.S. has the most, and then the other countries, China and Russia right here, they're accumulating. And then over here is the reserve of dollars. China holds the most USD. Yeah, it's interesting. And I showed you this graph earlier. This is the People's Bank of China, their balance sheet. So China's printing money too. Every empire will print money to take money away from its people. That's the perspective from printing money to the people. But there's also the perspective of printing money versus the sovereigns. So empires against empires, printing money against their people. It's fascinating. Now another thing, so we talk about, those were really crisis triggers, right? What could cause a crisis right now? Another trigger is China's crazy lending that's happening. Needless to say, the Chinese banking system grew exponentially on the back of such reckless credit creation. So let's see, at the bottom over here, I'll read it. Chinese banks have added more than 30 trillion in assets for a total almost of 40 trillion assets in a USD 12 trillion economy. For comparison, the total amount of assets in the US banking system is around 17 trillion. So Chinese banking, they're inflated as well. Devaluing the dollar, so if we're devaluing the dollar, they want to devalue the renminbi too, to kind of keep that import-export. I know it's getting a little complex to hold it in your head, but they want to stay, like, let's say if the U.S. is devaluing, right? If you're I know people online, you can't see this, but let's say over my left hand right here is the dollar, and over here is the renminbi, the Chinese currency. If they devalue the dollar and the renminbi stays the same, then which one's higher, right? So they both want to do it at the same time.
Yeah.
It's just something to think about in your head. But it's just interesting to see that China is leveraged as well, and further proving to you guys, or showing you guys that everything in the world is kind of like pushed to the edge. Like, I wonder if people who don't follow finance and they just analyze the real estate market, I wonder what they think about. Like damn, prices have gone up in like recent years. I wonder why. Well, I don't know. I'd like to look at the back end and see how it happens. Here's another chart. Expansion of central bank balance sheets. So not just China and the US that we looked at, right? But we want to see, like, you know, who else is leveraged around the world, like Bank of England, the Federal Reserve, Bank of Japan, European Central Bank, Switzerland National Bank, least leverage or total assets. But the leverage right here, leverage is at the bottom. Over here is the total assets. So you can see how money is printed around the world. So again, empires versus the people, and them printing money against people. That's just what the chart shows. U.S. government deficit. So this is what I talked about earlier. The Congressional Budget Office, they are saying that this is the projection right here. So they need more money. So if you see the zero line right here, if we're up like right here, then the government is profiting from our taxes. They have a net. But since 2008 and then since now, it's projected to be less. To me, I just interpret that as further pressures on the system. Now that you have a better understanding of the dollar system and around the world system. Because if you understand this, you go back and track and see what's going on. So that's why I asked you guys, like, does the deficit really matter when the dollar dominates? All right, you got the big guy flexing, and does the deficit matter? What do you guys think? I think the financial pros care, but yeah.
I think it matters, but I don't know exactly what realistic effect it can have.
Yeah, so like the deficit, right? It's the government needs more money. How are they going to get the money if we're not going to expand the Federal Reserve's balance sheet? Because that's how the money gets financed. When the government can't tax the people anymore, they get the money by financing treasuries. So they sell treasuries and get the money from the Federal Reserve by printing money. You see that dynamic? So how do we service this increasing deficit when we're reducing our balance sheet? So the question is the Fed really reducing the balance sheet? I know that was a little complex, but I know it's...
We're not though, that's what they're saying. We're
Like,
raising
but-
interest rates, we're taking money away.
Yeah, so where are they gonna get this money is my question. It's like you got a brother or sister or sibling who's like horrible at borrowing money, and they say they're gonna pay you back, but then it's like you don't know what they're doing, or you know what they're doing, and it's not gonna get your money back. You know the fundamentals of that flow.
So they can't print any more money, they're raising rates to take money away. There's still that debt that exists because of all these treasuries and bonds and all that.
Yep.
So when or if they default on this, I mean, because it seems like every few months they're saying we need to raise the debt ceiling, what to finance this. When that credit card is maxed out and they can't do it anymore,
Yeah.
what happens then?
Well, like I said, the pressure comes to us, average Joe, the pressure on our shoulders to pay more taxes, hidden taxes, or more helicopter money. Helicopter money just means more hidden taxes for us. Or what, not really a tax, but a devalue on our bank, our balance sheet. So it's, I know it's confusing. I don't know where things might go next, you know? I mean, if we all keep printing money to infinity, right?
Yeah, so I don't think there's any chance the U.S. will default.
Yeah, because of the economic standing.
So whenever they get into this debt ceiling issue that comes up,
Yeah.
at some point, you know, they all agree, okay, we have to increase the debt limit, and then they're able to continue paying the treasury interest and whatnot. So, and to get the money, it's the Federal Reserve. Yeah, it's again comes back to the Federal Reserve.
Yeah.
For QE or whatever to continue to buy the U.S. Treasury so that the Treasury can get the money to continue to pay off the interest.
So that's what the pros are saying. The pros are saying, see, these guys, the incrementum fund, they believe in that as well. They see 4 different scenarios. One is like going back to the gold peg. The other one is printing more money. Most of the pros see that they're going to print more money, and so.
So can you print more money? I mean, can you raise the debt ceiling as well as raise interest rates at the same time? Or is that just not a scenario that's possible?
Actually, can you go back to that graph where it was kind of leveling off on?
Which graph were we talking about?
Right there.
This one?
This one, yeah.
So
that's-
I don't know about this. You know, it's we'll monitor it because every increase, you know, the Fed, they'll say we'll increase 25 basis points. Then this thing goes down.
Yeah, so they'll try to reduce it.
Yeah.
That'll increase the interest rates.
Yep.
So that'll give them. So increasing interest rate is giving them ammunition.
Yep.
For later on.
Exactly.
They want to buy more treasuries,
Yep.
which will decrease the
Yep.
rates. So
It's really the pushing the can down the road. That's what they're saying. The layman term.
I guess it's kind of managing the situation.
Yeah.
Um,
So it.
so they have to tighten at some point to get some ammunition later, so that they can do another round of bond purchase.
Yeah. And so look, if you reduce too much, meaning raising interest rate too fast, capital market players are going to be like, screw this, I'm selling out, and then we're going to have another crash, right? But if they don't want that. So then what? They print more money. But if they print more money, pressure on our shoulders, regardless. For those who don't invest, that's the ridiculous part of the game. Like you if you're in this world, you live in this economy, and you're using the dollar, you have to invest. If not, then why are you working? Because you'll never beat the standard of living that keeps increasing because of them printing money. So investing is, in my opinion, mandatory. If not, you're always going to get burned by what they're doing over and over. So scenarios, right? Scenario would be the government spends less, but we have to service these interest payments and Social Security and military needs to flex our. I mean, it makes sense when they want to spend on military, because if we lose our flex on the world and no one uses the dollar, the rest of the countries don't want to use the dollar, then we can't manipulate the dollar anymore. We, as in the government, can't manipulate the dollar anymore. So if we can't manipulate the dollar, then our economy goes to, and the government doesn't get money. So you start to see who in this economy is the ruling class. It's super interesting. So yeah. Any other comments on this? I know it's provocative.
I'm just still kind of confused about because it seems like I could see being backed into a corner. And I'm new. I don't understand. I'm just trying to get that information. So they raise the debt ceiling in order to pay for the United States, right? All of the stuff, obligations, interest, and all that. But they can't do that because that weakens the dollar. You're saying we got to raise interest rates. So it just seems like there's two different forces. Like, what are they?
Yeah. So
what are the options? Like, what else are they going to do?
Yeah. So in your head, you're thinking of the government.
Yeah.
And the Federal Reserve as one, but it's really two. Let's just put this as central bank. It's really two entities. And so let's say over here is the people, right? And so the government gets money from the people through taxes, right? But their expense is too high, and so they don't have enough. So they need to go finance that money to service their initiatives, which is to flex their power on the rest of the world. So they will send treasuries that inflate, the balance sheet of the central bank, right? That inflates it, but then the central bank will give them money, right? So thus printing money, and thus, not only taxes on the people, but it devalues our money. See that dynamic? So at this point, the central bank balance sheet looks like this. It's too high, and they're saying they need to, reduce right here. But are they really? Because if they don't, then the stock market goes up. And people think like, oh, we're making more money, but it's the people who aren't playing in the stock market, who aren't investing, are getting hurt really bad because of lack of, knowledge or understanding of how the system works. So, how can you be a money manager if you don't know this stuff? Hedge fund manager. So, and at the same time, right, their debt's increasing. So how much more can it go is the question. We could keep printing to kind of like, all right, let's take a vacation. Let's just keep the economy going. But the rest of the countries don't like that. And who are you going to service? The other, as a United States, are you going to service the other sovereign players, or are you going to service your people? Who's more important to you? But yeah, that's.
Yeah, so maybe the real question is, what was your question about? What doesn't matter again?
The deficit, the government's deficit.
Oh, okay. Maybe that's
them needing more money doesn't matter.
Yeah, maybe that's not. Maybe the question is, does the balance sheet of the Fed does that matter?
So the whole Federal Reserve coming into play here, right here, it's just a creative way of saying that this is just really one unit. It just became 2 unit so that someone else, it's like an invisible entity, a ghost entity to take on all the laws. It's just the government splitting itself in 2.
Yeah.
Right? Because if it was one, then like at this point, I know they say they're separate, but it almost makes more logical sense to say that they're one for just this discussion. Say that they're one, and they just need more money from the people to finance their initiatives. So, you know, seeing that Trump is a capitalist, a hardcore capitalist, a billionaire capitalist, getting into politics is not. I don't know. I don't think that was a. I think he has a plan. I think one of his books. I forgot which book. It's The Art of the Deal or whatever. But his style of playing deals or getting deals is to corner the other player into into an area where they have to say yes. That's his style of deal making. So maybe his way, if you reflect into like the way he's running the politics and stuff, he's trying to corner the other sovereign players into a way where they have to say yes. You know, because like the tax reform or bringing back the dollar, like there's a lot of things going on, and it's very hard to say what's going to happen next. Guys, I'm just a small person here. I'm just showing you what I learned and what interests me and how we all can benefit from this.
So my question is not, does the U.S. debt matter? To me, I think maybe no.
Yeah.
But does the balance sheet of the Fed, does that matter? I mean, if it goes to, how much is it now? Balance sheet.
Right here at about 4.5
Yeah,
trillion.
What if it doubles? Does it matter?
Then if it doubles, stock market's gonna double, dude. So we can capitalize on that, but it's like people who aren't capitalizing on it, they're gonna get hurt. So it's a real estate prices are gonna go even higher.
Yeah, so if it doubles, that means there's a lot more money floating around, asset
So
price inflation.
it's a deal environment. We gotta go out there and chase deals, right? If you're a salesperson or whatever, if you're an entrepreneur,
Okay, so
you gotta chase deals. You gotta take risks. It's risk on. But if they're gonna say, hey, we're flagging, we're flagging a risk off.
Yeah, so maybe the real consequence is not really the debt level of the U.S. government, it's the balance sheet of the Fed, because that affects the asset prices. And the higher the asset prices go, the lower and harder it can fall.
I think it's both though, because it's the government says, hey, money, and the Fed's like, okay, balance sheet expansion. Their balance sheet expansion versus like the government's balance sheet expanding as well. Both balance sheets are expanding.
Okay.
Yeah, it's the dynamic is interesting. Both balance sheets are expanding.
Yeah, but I'm just considering like what affects more in the real world for people.
So real world, if it's the deal, the hot environment continues, and go out there and strike deals before this window closes. Be aggressive. In great times, go get the deals. How you spend the money? So JC had a comment right here. Bullish on securities, right? How U.S. spends money. So their budget allocation, Social Security. Is there percentages on here, JC? How Washington will spend your taxes in 2018? Okay. Defense, interest, national debt.
Hey, this is by household percentage, so it kind of breaks everything how it's distributed.
Oh, I see. That's cool. Yeah. Let me share this with the group, and then I'll send you guys the report as well, so you guys could look at it again, because I know it's a lot to cover in a very short period of time. You're welcome to join the group as well, just to like keep in touch and bounce ideas. Like I don't know like what business you're in, but whatever happens you're in, we could bounce ideas and just see like, hey, are you experiencing like tightening over there? Let's analyze the macro. Is it hitting us at the micro? So we could go secure deals or keep investing. But anyways, back to the QE reversal. So, did you guys have any more comments on like the situation at hand? Here's the USA debt chart. I know we looked at the Federal Reserve Bank balance sheet. Now this is the government debt chart. And then look at the interest expenditures right there. It's at all-time highs. So we have a lot more expense. And then just pulling up JC's household. Let's see. So let's say 12K, 6K. How much is the interest expense? 2K. So the most is really, oh, sorry, okay, so the biggest is really up here. Social Security and Medicare. Interesting. That's good. Defense. Yeah. Education's like really low, right? So it's like, you know, we're the average crowd is chasing a degree that's like not really funded. I know the world is crazy, right? Like the way, like everything's so lagged. Yeah. So let's see what other charts I have. U.S. interest rates, financial. Okay. So this is an interesting chart, guys. This was in the last year report, but I thought I'd pull up again as well. In the past 100 years, every single 16 of the out of 19 rate hike cycles were followed by recessions. So 2008, 16th rate hike resulted in a recession. Right? So historically, 16 of the 19 rate hikes. So 2018, we're you know bringing rates up. So just like I said, we're at the later stage of the business cycle. We got to be more strategic on our investments. Invest in the more robust ones. Then don't be too speculative. You can, huh? There's nothing wrong with that. But just a nice statistic to kind of keep in the back of your mind as you invest. Yeah.
Right, so this is like a pattern. It's not necessarily that rate hikes causes.
Yeah, it's just a pattern.
Yeah.
Like 16 out of 19. And then we already talked about this, the everything bubble. It's true, because like, would you put a large position on stocks right now without monitoring it? Kind of difficult. Would you buy bonds right now and get locked in? Locked in meaning right now, let's say bonds 10-year paying 3-4%. Would you get locked in? But you're going to get that 3 or 4%, but your bond value goes down, but your interest goes up. So you're still going to keep your principal and interest. You just lost time. Does that make sense when I say that? Because you buy it now, you get locked in, and the bond drops in value. So it's like you got to trade bonds like a stock. Because if you get into bonds and it appreciates, then you could sell out before the interest pays you. So bonds are at highs too. Real estate's at high as well. So it's super lucrative, in my opinion, to have a career in these spaces if you think about it, right? If you're brokering stocks, if you're brokering bonds, if you're brokering houses, real estate agent, it's pretty lucrative. But let's see how this game plays out. It's exciting to watch. But anyways, cryptocurrency. So disruption of the world monetary order. To me, it's like my view is like it's going to be an internet currency. That's what they talked about. Like I drew this picture earlier up here, right? And it's just a picture of like a physical world, but we didn't draw the internet. What does the internet? The internet is an ecosystem at this point. It operates on some type of currency. Well, not widely Bitcoin yet, but it makes sense in a way. So I know Bitcoin's dropping right now, but I just gotta take a look real quick. Yeah, wow, selling off hard, huh? That breakdown at 7,500 right here, and then further breakdown. Yeah. Let's see how it plays out. Yeah.
I'm not totally anti-crypto. I just don't think it's Bitcoin.
Yeah. If you read the white papers, you understand how it works. Then, yeah. To me, it's like I think this technology is going to stay. The blockchain concept, the whole public ledger, having like a public visibility on transaction, that anyone could look at the transaction. That makes sense. But I don't know if it's going to be Bitcoin or whatever. But yeah. So guys, that pretty much kind of concludes what I had to talk about today. I know it was more of a discussion style, not typical me having organized stuff on here. But it was really hard to kind of consolidate 230 pages. So I don't want to leave you guys like hanging. So I want to send you guys this my highlights as well as my copy of the report, so that you could view it yourself. Because I think these guys did a great job in terms of like analyzing the macroeconomics in terms of fundamentals and stuff. So I'll upload it, and we'll catch up in the next meeting. Go over report notes. Okay, I'll do it later. I'll send it later.
Do you have a site where you can just kind of store?
I know, right? Like a box. I don't.
Yeah, or something.
I should, huh?
And then people can reference the previous discussions.
I know I should. I mean, I've been.
But you saved them.
Yeah, I've been recording them. It's all private videos.
But the documents.
Mm-hmm. Yeah.
Okay.
I have like a shit ton of sorry, a ton of docs out there. It's just.
Yeah, you should like organize them.
Yeah. It's just a lot of work, man. But yeah. So, anyways, let's jump back to the stock market. Like, any comments on like how you feel after today? I know it's your first time. It's super technical, but I try to bring it down to like real world level. Any comments or concerns or things that you feel about the markets, or how to better analyze the markets? Like, one thing that if you were to walk away today, I say keep in mind of what the S&P 500 is doing. That could be like your greatest weapon moving forward.
I mean, from just total rookie standpoint of just trying to find out what's going on in the world, it's a little less. The clouds are starting, the smoke's starting to clear.
Yeah.
I do see that the U.S. and the world economy is kind of backing into these corners.
Yeah.
And I'm just still curious to see how Bitcoin is in this arena, like how investors, because I mean it makes sense. China and Russia's buying gold.
Yeah.
They don't want to use the U.S. dollar as a global currency anymore. There's the presence of Bitcoin. Like, how are they going to be these what you call it, sovereign states? How are they going to be looking at Bitcoin? Just looking at the news or thinking about the news in the past, the stories that I've read.
Yeah.
It seems like sovereign powers don't like Bitcoin. Like, they do restrictions on it. In general, they don't like it.
So the key thing for me to kind of look at here, what I want to see is sort of an order of operations. I'm already seeing like the younger crowd kind of like accept it, but they're maybe not super educated about the topic yet. The key thing I want to see is the leading tech companies, because they kind of set the standard for the world. If they start adopting cryptocurrency, I think they will adopt first, like the Facebook and stuff, and then maybe the sovereigns. But the sovereigns like a super speculative one. I think for a fact that the major tech will adopt first, just because everyone's looking for upside. You think people think like, what's a great stock to buy? Everyone comes here looking for upside, but you gotta understand what upside in this environment would you want to pick right now, right? Because if you want to invest in Apple, well, you're investing into Apple believing that Apple will find upside for their stock to have upside, right? So we just want to store our money with someone who sees the upside. It's not everything stock market, right? You can find upside in like micro deals at the individual level, do deals, and you can find upside in like single stocks, like I don't know, CRM, Splunk. They appreciated. Disney bounced off the levels this week. Costco broke out. That was a good one. Costco, that one broke out.
Really? Okay.
If I recall, yeah, I was watching it. Costco.
Oh, nice.
At the daily level, so he broke out right here. On earnings too, if I recall, I forgot. So yeah, like everyone's looking for upside, but it's gonna be a challenge because we probably all have a main job and then a side hustle or whatever. Like we're all competing with each other. It's a fact, right?
What is the market outlook for next week or next 10 days?
Yeah, my market outlook for next week, things look pretty okay. Volatility is low. We did analysis early on. I'll show you SPY, QQ, and IWM. This is basically the major indices. They're an ETF. So this is really good for me to see. The next thing I want to see is a breakout above 280. But when I see a move like this, I get pretty bullish on all my other stocks. Like it's just sort of an environment to get a little bit more confident. So if you look at, so that's the S&P 500. If you look at the underlying, like whatever securities kind of appreciated for the week, you see some activity maybe, like let's see, Nutanix, Micron maybe, right? Like some activity, BABA. So I started adding quite a bit. I added some BABA.
It started this run 10 days back, or when did it start this run? Like
You could count the candles. So
Yeah.
1, 2, 3, 4, 5, 6 days back after that breakout.
Okay.
Yeah. So the past week was pretty nice. But that's SPY right there, guys. QQQ. Another one. This one's like during the week it was like all-time highs.
Last one day was probably a little bit correction, right? Last 1 or 2 days.
Yeah. So that one looked good. So environment looks a lot better than maybe a month ago.
Yeah.
Significantly better. Like Dow Jones, right? We were stuck in that channel, but it looks like it's coming up right here. So my short-term view, it's pretty solid. You could use Elliott Wave, Caldero, see what he thinks using Elliott Wave. I don't know Elliott Wave a little bit, but long-term he sees uptrend, mid-term uptrend, short-term as known as this uptrend has been rising since the early April low. Internally it has been somewhat choppy compared to other uptrends in the bull market. However, the larger waves within the uptrend do suggest the market is progressing impulsively.
Yeah.
So that's his analysis. Old school analysis, but good analysis.
This guy.
Yeah, Tony Caldero. It's for wave theory. And then we looked at the volatility term structure. It looks good as well. So I don't know. I don't feel insecure about next week. I feel okay. Continue to play. But Bitcoin, as of right now, that's the most exciting one to comment on. With the other chart. Wow. Just amazing, huh? I mean, this is the hourly, right? So don't get like too scared. Look at the daily. Daily, be like, oh, breakdown. If you see something that looks like this long on a daily, then it's like, okay, that's kind of scary. But just performing a quick technical analysis on this, what do I see? Definitely the price level right here. It's broken down. So that's looking negative. So the next test that I want to see is 6,000. Right? This one.
The whole dollar amount.
Yeah.
Why do you think it dropped so dramatically in February? What was going on in that?
February.
Oh, there were a lot of news like all over the world, central banks were like banning Bitcoin and cryptocurrencies.
Yeah.
So like Japan, Korea, and
Why do you think they're banning it after today?
oh,
Yeah. Yeah.
I think it's very unregulated. Like the cryptocurrency market and the technology is unregulated, so they try to put more regulations. The moment you have more regulations, you will have this kind of.
So it's unregulated and
Yeah, it's unregulated and like anyone can transact money on the internet, drug dealers and all those things.
Yeah.
So that's why they try to regulate it.
do you
Tax
think
laws.
that it might have any kind of fact that it kind of, would you say that it threatens a sovereign power by there being cryptocurrency? Because a country can't really control it because it's everywhere. It's,
Yeah.
You cannot.
So the way I see it with investing, right? I see tech bleeding into every sector, every industry, and now I see tech bleeding into monetary policy, monetary currencies. So tech is disrupting everything. I love tech. We're in Silicon Valley. It's like the tech hub. So all right, guys. I'm gonna end it here. I had a long weekend. My cousin's graduation. It was a family party yesterday. And so slept a little late, like 11, 12. That's late for me. I wake up early. So that's pretty much all I have this week. Let me know if you guys enjoyed it or any comments. I'll send you guys all this probably later, maybe right now. See if I do right now in the lab.
So do I have to be in the chat room to get all those notes, or can
I could give it to you. Okay, cool. All right.
Oh wow, nice.
Yeah. Okay, let's just send that. So we're in this Telegram chat. For people online, you guys want to join and just keep in touch, hang out, whatever.
Are you changing your location to Cupertino?
I'm trying to.
Okay.
Not maybe
Not yet.
not yet. Yeah. So I did talk to them. The only issue is that there's other real estate agents that are running meetups too,
Okay.
because they're trying to get deals too, right? Man, speaking of real estate agent, I was on Stevens Creek Boulevard again at the cafe, and you know, I usually go to a cafe and study or read, and there's a real estate agent going there with a client, and the deal was going down, and well, it was. I've never seen a real estate agent in a wheelchair, but anyone could sell. Like it's just, you know, like I thought it was the client, but it was actually the real estate agent who's in a wheelchair.
Yeah.
But you know,
I used to do
that's inspiring.
I used to do loans. I was a loan officer back during the housing bubble.
Yeah.
And there was a guy that had cerebral palsy that was in a mechanized chair, and he was killing it as a loan officer. Like he was, you know, closing a lot of deals. Yeah. And it's just strange because, you know, it's just all about how you market yourself and talk.
Yeah. So, you know, as I know there's interest in like how to find deals, as we segue into like new topics, because, you know, stock markets are cool, but we'll keep talking about it, but you guys want to become better in terms of like understanding like maybe every aspect of the economy. I'd like to, you know, maybe talk about sourcing deals, if that's something you're interested in. Like, let's say you sold your property, you might be looking for another property, or what methodology are you looking at, how to analyze the market, like maybe like cold calling for deals. What's your line of business, if you don't mind me asking?
What I'm doing now? Well, I'm a nurse. I work for Kaiser.
Okay.
But you know, I was a loan officer, and I did that for like 5 years during the boom.
Yeah.
And now I sold my house. I wanted to capitalize on the high prices, and I believe that the housing market, stock market, is going to correct.
Yeah.
I don't know when, but I just wanted to cash out while I had a significant profit.
Yeah.
And now I just want to find where to put my money, which is the smartest place to put my money. And Bitcoin, I thinking about Bitcoin because I just want to learn about it because it intrigues me.
Everyone wants to learn about it because it's like that hot market segment. Again, so last week we talked about analyzing businesses, local businesses, and what multiples they're trading at, trading about 2 or 3 multiple. But we also analyzed commercial real estate, and we also saw that, you know, it's not just home prices are at highs. If you're going to do commercial real estate, the cap rates are low. That means they're also at highs. So every segment, it looks like to me, is expensive. It's not going to be cheap. So here's multifamily in California. If you guys have any comments or questions about last week, how we kind of analyzed the segment, how I showed you that the key thing to look at is really just the cap rate, because the cap rate is the PE ratio upside down. So the lower the cap rate, you know it's like kind of overvalued. Or, you know, do you want to pay 25 years for this, 3.3 million, and start reaping the cash flow? So up to you. And the deals that I see that are kind of cool are like, okay, where do I see great upside? Case opinion. I see upside in cold calling for off-market deals. Venture capitalists do that too. They cold call for entrepreneurs to get a startup deal before the other series. That's how the game works, right? If you go on Redfin, Zillow, all that, it's already on a public market website. The market knows about it. So if you want to find a deal, you gotta get in there and start doing your deals game and negotiate lowball. There's always going to be people lowballing. When I was at the business broker office, they had private equity groups, which are like maybe a group of like 5 MBAs. They team up and they call in and say, "You guys have anything for sale?" Yeah, they want to put a lowball bid on it. So I mean, if they could go in and restructure, you know, the business, bring in more sales, reduce expenses. Hey, they got a different cash flow picture. That's the same thing we would do in commercial real estate. Last week we talked about finding properties that are 70% occupied, which is almost the equivalent of finding 70% on the dollar in an off-market real estate deal. So that's just another technique that I see some people utilizing in this local economy to make money. Yeah, so that's some of the places that I see an upside right there. Venture capital is a longer term game. Like it's like 5 to 10 years in my opinion.
Can you scroll down?
Yeah.
There's a Fresno, what is that?
What is 17?
Fresno,
apartment? Oh,
114 units,
okay.
5% cap rate, so 20 years to pay this 17 million back.
What does 5% mean? What does 5% cap rate mean?
Oh, so PE ratio, you know that by now?
Oh, yeah.
Yeah, so cap rate is PE ratio upside down.
Oh, okay.
So this means, I said last time, put 100 over the top, and that's how many years it takes to pay off. So 100 over 5%, 20 years.
20 years, okay.
Yeah. And then you could go in there and you want to see like, okay, 17 million, what's the cash flow of 17 million? It's nothing compared to a business. Let's see if we can get the cash flow. Price should be down here. Sometimes they might not have it, but they'll tell you like how much does this cash flow bring me?
It's price to earnings for this, that cap rate, that's over the
5%.
year, like how much?
5% of this.
So, oh, okay.
Yeah, so it's like, it's 17 million.
Half of 17,000?
Yeah.
No, what am I saying?
100
Yeah.
850,000.
Yeah.
800.
So,
But it's,
I mean, it's a more robust asset class, and you get to. I mean, everyone needs to have
do you think
a
5%
ceiling.
cap rate is good, or
Do I think what?
5% cap rate is good?
So I think people like 10
10.
to 12, but you won't find that in this market. 10 would be like 10 years to pay off the commercial property.
Pretty good, I think.
Right, that's pretty good. But you won't find that in this market. It's actually double that.
Not in Bay Area, right?
Like 4 years, or 4%, 25 years.
Uh-huh.
10 years,
Oh, yeah.
it's not bad. Berkeley, right? Berkeley, 8 units, 10 years. Assuming you could secure that cash flow, getting someone to pay you that money for that many years. So one trick is to find, look, let's say 8 units, right? Let's find something that's 70% occupied. Let's say it's 10 units and 7 units is occupied. There's room for 3 more units to be occupied, so we could deliver that cash flow.
Mhm.
If we go triple net lease it up, which is getting them to sign a lease, and then selling that collective unit to the market. So that's a strategy. But to me, it's like you do 10%, but you jump over the business broker side. Everything's about like 3 years, 2-3 years. Like this one, 2-ish, 3
Oh,
years.
these are like businesses.
Yeah, but this is active income, so it's heavy time investment. See, like a multiple about 2, you make 192, you spend 549K.
So 2-3 years, if you
Right.
it is like active in.
Yeah, active and they will train you for like maybe a couple weeks.
Who will train you?
The owner when they pass it on.
Okay.
But it's really up to you to operate. Like for me, I'm 27. I'm trying to like figure out how am I gonna make it in this economy.
Yeah.
So I'm just trying to figure things out, looking at different segments with the knowledge I've accumulated. And this area seems okay if I want to invest my time, though I don't know quite yet. At this point, I see the whole real estate agent as a very lucrative business model, something that I just want to sit back. At some point, I want to be less active trading and just sit back and collect money. And so if you could inspire, if you're good at sales, you go out there, talk to people. If you do good for people, that Quan Si, which means trust in Chinese, or that karma will kind of come back to you. I believe in that. Like there's invisible points that I get, Like I don't see me like wasting my time teaching you guys if like it inspires you to like go make more money, because we all become more successful. And then something happened. Hey, welcome. Oh, I'm sorry. Sorry, 12. Yeah, I'm sorry. I just saw the clock.
If I wanted those notes you just sent down to the rest of the group, can I just email you?
We'll talk outside. I'll get your number and then we'll. Hey guys, online. Thanks for coming. We'll catch up next week.
Did you join the Telegram?
I gotta go. Someone's coming.
Telegram.
Well, I saw the tele group, but I wasn't actually electronically present. I was just.
Oh yeah. So
So-
this Telegram group